Hello, I'm the Canadian Dividend Investor. In this video, I'll take a look at 7 dividend stocks I added to my Canadian dividend portfolio this past week. I'm not a financial advisor, I'm just an investor sharing my journey, so make sure you do your own research. Stick with me and see what I have for you. This past week saw some craziness in the market, with GameStop, BlackBerry, and AMC jumping all over the place. The New York Stock Exchange dropped 3.5%, while the TSX dropped almost 2%. What it meant, though, is quality companies went on sale, so it's a good time to buy. And if it continues this next week, it might have better opportunities again. The first company I'm going to talk about that I bought into this week is ENGH Systems, ENGH on the TSX, which is an application software company and has a market cap of $3.2 billion. If we look at the earnings announcements from ENGH, you can see in the first quarter, they just missed out on hitting their estimate. The next 2 quarters, they not just beat it, they smashed it out of the park. And on the last quarter of 2020, you can see that they beat it by a pretty good margin. Year over year, you can see both their revenue and their earnings have been increasing. Analysts that are posted at both Yahoo and TD both show that the stock is going to be on the rise in 2021, with the lowest showing that it should finish at around $70 to $71 and the average being $77.50 by the end of the year. Daniel Chan, who sees an annual return around 25%, says that this price should be in around $83. ENGH Systems doesn't pay a big dividend as it's under 1% and has only seen an increase in the dividends for the last 6 years. However, in those 6 years, the dividend has increased 170% and has averaged 18.1% per year for those 6 years. They also announced in December that they'll be paying a special dividend come this February of $1.50 per share. I hold a very small position in ENGH Systems right now, as I just got into the company in December when I bought 1 share for $63.72. However, the more I researched the company, the more I liked it. And this past week, when I saw the dip, I bought another share for $60.50 on Thursday, and when I saw it dip further on Friday, I bought another share at $59. Currently, I'm down 3.85%, but I'm confident in this company and will likely look to continue to add in the future. Right now, my dividend payment will be just 41 cents quarterly from ENGH, but I'm in this for the share appreciation and the future dividend growth. As well, I'll be looking to continue to add in, which will just bring the payments higher. Before I get into the second stock, I'd like to ask you to hit that like button to help the channel grow. The second company I added into my portfolio this week is Pembina Pipeline Corporation, PPL on the TSX, which is an energy company that has been serving that industry for over 65 years. Over the 3 quarters in 2020 that we've gotten the results so far, Pembina missed their projected earnings in each of them. However, as you can see, in the third quarter, they just missed out, and we're still waiting on the results from the fourth quarter of 2020. Analysts between Yahoo and TD total at 37 results. Each analyst has a price higher than what it is right now, with the low being around $34 and the high being $42 by the end of 2021. I first got into Pembina at the end of December when I bought 10 shares and the price was at $30.33. In just under a month, I've seen the share price increase about 11%. Over the last month, the share price rose as high as $36, but pulled back this week, so I took the opportunity to buy another share at $33.75. Pembina increased their dividend payments by 5% last February, which made 10 consecutive years of raising their dividend. Their current yield on cost is 7.5%, as they pay a monthly dividend of 21 cents per share monthly. After my purchase this week, I'll get a monthly dividend of $2.31, and my yield on cost is about 8.1%. My third purchase this week was TransAlta Renewables, RNW on the TSX, and is a renewable energy company, being Alberta's largest producer of hydroelectric power. I first got into TransAlta Renewables a couple years ago for about 2 years, and between share price increase and dividend, I had about a 44% return. I bought back in last spring and recently started continuing. I only own 12 shares, and after I purchased 1 share this past week at $21.90, my average cost is $16.11. Analysts are spread all over on this share, with the average saying the stock is a hold, and I can't disagree with them. The stock has risen a lot since COVID and peaked in early January around $24. which would have seen a 119% increase since the crash. TransAlta quite frequently misses revenues and will likely see a decline in 2020. And as for the dividend, they haven't raised it since 2017, but does pay a 4.35% and is a monthly payment. The next two stocks I'll talk about, I won't go into a lot of detail as I've covered them in previous videos this past week. The first is TELUS, which is one of my favorites as they expand their company from the telecom market into securities and telehealth. I bought twice into TELUS this past week, both being on Friday. The first purchase I bought was 2 shares at $26.80. When the price continued to drop, I bought 2 more at $26.50. I now own 102 shares in TELUS at a cost of $23.67. TELUS recently raised their dividend 6.85%, and if they stay on the same pattern that they've gone over the last decade, they're likely to raise it again this summer for about 3.5%. They currently pay just over 31 cents a share, and it comes in at a yield of 4.71%. I currently get $31.74 payment from them quarterly, or $126.97 annually, which comes at a yield on cost of 5.26%. The second stock I've spoken a lot about is TD Canada Trust. This is a company I buy into every 2 weeks and have covered a lot lately. TD currently pays us 79 cents quarterly per share, which is a 4.36% yield. TD is at risk of losing 10 years of consecutive dividend increases as the Canadian government has put a stop on Canadian banks increasing their dividend payments. But they'll have until the end of 2021, as they did do their increase at the beginning of 2020 to try and keep their streak going. Currently, I get $11.06 payment every quarter and have a yield on cost at 4.76%. The last 2 dividends I bought are ETFs. The first would always be my suggestion for beginner investors to buy and hold. That is VFV from Vanguard, which tracks the S&P 500, which has the 500 biggest companies on the market, like Apple, Microsoft, Amazon, Tesla, among many other dominant companies. The dividend for VFV is very small, only around 1.2%, and is never consistent on how much it gets paid each month. It's dependent on the companies that it's invested in. I still haven't figured out how it pays out, so if you know, leave a comment in the bottom to help me out. I typically estimate that it's going to be around 25 cents per quarter, just to be on the safe side. In my Canadian dividend account, I buy 1 share of VFV every 2 weeks. No matter what the price is, I buy it. I currently own 11 shares at an average cost of $82.68. I made my purchase this week at $86.90 and watched it drop, but in over the long run, it will continue to go up. Since starting to buy in on this account, I'm up only 2%. The second ETF I bought goes by the ticker XFN from BlackRock, which tracks the financials on the TSX. It holds 29 companies, the top 10 holdings if we scroll down, are Royal Bank of Canada, Toronto Dominion, and Bank of Nova Scotia. Just these 3 alone own about 50% of the ETF. XFN pays a monthly dividend at about 12 cents per share, which comes in at a yield of 3% for the year. I bought 2 shares of EFN back in April at $32.16, and after seeing an almost 20% gain, I bought a third stock at $38.50 this past week. So a big part of buying these stocks was to increase our dividend payments. The 2 extra stocks of ENGH bring us to 3 total, and we now get a quarterly payment of 41 cents and $1.62 on the year. The 1 extra share of Pembina bring us up to $2.31 every month to a total of $27.72. TransAlta Renewables brings us to 94 cents quarter or monthly and $11.28 per year. The 4 extra TELUS bring a quarter payment of $31.74 and $126.97 over the year. TD increases it to $11.06 quarterly and $44.24. XFN, the extra share brings it to about 36 cents and $4.28. Currently, this portfolio brings in $278.31. Before you leave, I'll ask you to hit that like button. And I want to thank you for watching this video and sharing my journey. I'd like to hear which companies you have and suggestions for dividend growth companies in the future. Don't forget to hit that subscribe button. We'll see you at the next video.